So after first hearing about Bitcoin in 2017, I found it so interesting that I actually dropped out of university to take a gap year to investigate this crazy thing called Bitcoin. After about 1,000 hours studying Bitcoin, I learned pretty quickly that I wasn't going to go back to university to study, and I found Bitcoin so interesting and such a revolutionary thing that I actually sold my home to live in the back of a van and a truck to save more money so that I could buy more Bitcoin. So since those crazy days of 2018, I've actually spent somewhere around 28,000 hours studying not only Bitcoin, but some interesting rabbit holes like the history of technology, the history of money, politics, finance, and business. So today I'm going to try to summarize those crazy 28,000 hours of me going down all sorts of different rabbit holes into 9 simple learnings that will not only, hopefully, save you years of trying to figure out these topics on your own, but will hopefully put you on a path to financial freedom. This video is essentially going to be the video I wish I had in 2017. Not only for myself to learn about Bitcoin at an accelerated rate, but also to give to others, because we all know how tiring and frustrating it can be trying to explain Bitcoin to our friends and family members.
Why don't you break this down simply for people like me that don't fully understand it?
Okay.
In all seriousness though, these 9 lessons I'm going to be sharing with you guys today have absolutely changed my life. I was literally broke, homeless, living in the back of the van with my dog Coco when I first learned about Bitcoin. Today, I've had the opportunity to travel the world to 23 different countries, do what I love, and even had the opportunity to meet some of the biggest names in Bitcoin, like multi-billionaire Michael Saylor. So make sure you stay to lesson number 9 at the end of today's video, because this was the final reason that convinced me to sell my home and buy Bitcoin. But let's start with the most controversial lesson or learning that I've accumulated over the past 8 years. Bitcoin's volatility is a feature, not a bug. And as Michael Saylor would say, volatility is the price you pay for vitality. So what exactly does that mean? Well, when I first got into Bitcoin in 2018, it was scary to buy Bitcoin. Everybody told me I was crazy. At the time, the price was down by 85%, and the chart of Bitcoin looks something like this. And it wasn't until I spent many hours down this rabbit hole until I realized that it's actually very common for a new emerging technology to be extraordinarily volatile in its early years. Amazon, for example. It's a $1 trillion company today and one of the most successful, but most people forget that Amazon had 5 big crashes with a bigger than 80% crash. Did those crashes mean that Amazon was dead or is not valuable? No, of course not. It was early, it was young, most people didn't understand what it was. So Bitcoin's volatility scares a lot of people. And it scared the living shit out of me in 2018 as well, until I understood that Bitcoin is the best performing asset in human history, and for it to rally from 0 to $65,000 a coin in 15 years, it's gonna do that with a little bit of volatility, okay? It's impossible to return such incredible results without doing it in a volatile fashion. People will often look at this matrix of the best performing assets in the world, that Bitcoin continues to take that top place as the best performing asset year after year after year. Now, I think a big reason why a lot of people are shocked when they look at this matrix of Bitcoin's returns year after year, or they're surprised by how volatile Bitcoin is, it's all because they don't understand this one chart. And this is Bitcoin in logarithmic space. Now, this is a log chart of Bitcoin, and you can see Bitcoin has had 6 enormous crashes, bigger than 60% in its lifetime before. But notice something very specific about all these crashes. Each time Bitcoin crashes, it's to a higher and higher low. So what I think we're actually watching here is Bitcoin being adopted by the world, and it goes through these hype cycles of adoption. But each time it crashes, quote unquote, we see a new flaw in Bitcoin because a new cohort of entities have recognized Bitcoin's value in this adoption hype cycle that we see every 3 to 4 years. And these new strong hands realize that Bitcoin's a new technology and you don't sell the superior technology. The same people who bash Bitcoin's volatility probably own Amazon stock. And Amazon stock is a really interesting one to look at because, like Bitcoin, it was incredibly volatile in its early days. It had 4 crashes bigger than 80% in its life cycle. But did that make Amazon worthless and speculative? No. Amazon is a dominant monopoly in the digital space. There is no second best when it comes to online buying and, purchasing something from a site that can deliver it to your door. There is no second best. It is a winner-take-all game, like money, like technology. So again, I think as you see these new emergent technologies be adopted, it's very natural that their price be very volatile. We would have seen the exact same thing with the internet as it was being bootstrapped and adopted by the world in the 1990s and the early 2000s. Internet adoption would have looked very volatile if it had a price, but you could not buy a share of the underlying internet protocol as it was being adopted, which is very different to Bitcoin, and this is just another reason why Bitcoin is such a revolutionary technology. Now, speaking of the internet, let's get into my second big learning about Bitcoin. Decentralization is not a scale, it's a binary. Now, I might trigger some people with this second point because there's a lot of debate about decentralization. Again, you got Bitcoin and you got 25,000 altcoins, and there's always a debate. Okay, Bitcoin is the most decentralized cryptocurrency, but then Ethereum is like the second most decentralized cryptocurrency. Then you have Solana, then you have Binance, and there's all of this talk about proof of stake, proof of work, what's the most decentralized? And at the end of the day, my opinion is going to trigger a lot of people. I think there's a simple way that we should be looking at decentralization. I like to keep things really simple, and I like to think about this one question when it comes to decentralization. Is your project decentralized enough to withstand a nation-state level attack? Yes or no? If you are not decentralized enough to be able to handle an attack from a nation-state, I don't think your project is decentralized. I think you're LARPing, okay? Think about what we're trying to achieve in the world today. For the first time in 7,000 years, we are trying to create private money that actually disintermediates and takes away the power from the rulers, the ruling class. And this is potentially our first real shot at doing it. So do you really think that the most powerful governments and nation states around the world will not try to come after you and attack you in the future if you're taking away their most important power? And that, of course, is the power to print. Each year, governments are able to redirect or steal trillions of dollars from economies all around the world. And they steal that money through printing that money and reallocating that money to where they want it reallocated to. I'm not going to get down that rabbit hole in today's video, but do you really think they're not going to come after us in the future if we're trying to create competitors that takes power away from their system that enriches them? Of course they're going to come after you guys, okay? And do you really think that Ethereum, which is now switched to a proof-of-stake system, is going to be able to withstand a government-level attack? Really? You don't think the government could just buy 50% of the Ethereum tokens? Or even just put Vitalik in the back of a van and the other 5 people who were able to get their hands on a large majority of that 70% pre-mine of all of the Ethereum tokens that were mined when Ethereum launched years ago? I mean, it's not hard to get 50% of Ethereum supply. It's a proof-of-stake protocol. You control the protocol when you have 50% of the supply. Same with Solana. Solana has had more than 13 network outages. Okay, again, this is supposed to be like decentralized money for the world. The separation of money and state. How can you even call yourself that if you've had 13 network outages where a small handful of people who control all of the nodes in Solana can just all say, yep, let's turn off the blockchain. Let's freeze the global transactional layer. It's all over. We need to do some upgrades. Okay, again, I think it's very simple. I don't want to harp on this point. Decentralization is not a scale. It is a binary question. I believe it is very black and white. Without getting lost, I think it's easy to say that Bitcoin is very different to this. There are hundreds of thousands of Bitcoin nodes distributed all around the world, and if the government wanted to destroy Bitcoin, they'd have to go and knock on the door of those 100,000 plus individuals who have a copy of the Bitcoin ledger, and they would have to try to destroy every single copy of that ledger, okay? Bitcoin is a proof-of-work based system. It has made a lot of sacrifices that make Bitcoin a lot slower on the base chain, but makes it possible for the everyday person to run a Bitcoin node and verify Bitcoin transactions, which I think was a trade-off worth making, because at the end of the day, it doesn't matter how fast your blockchain is on the base layer, if it's not decentralized, and if it can't stand up to a nation-state level attack, I don't know what you're doing here. That's as simple as that. The next lesson I want to talk about today is that politics can affect things locally and temporarily, but technology is what drives things forwards globally and permanently. So that, of course, is a great quote from the book Broken Money by Lynn Alden, and I think it's really important to remember that, especially at the time that we're kind of living through right now. Everybody's talking about Orange Man and Crazy Lady, and everybody's talking about the 2024 elections, and everybody's so focused about thinking, oh, what's going to happen? Is the government going to ban Bitcoin? Is the government going to embrace Bitcoin? At the end of the day, technology is what shapes governments, okay? This is obviously what the brilliant book, The Sovereign Individual, laid out, written in 1997. It shows you how government and power structures have fundamentally changed because of what technology was available at the time. The thesis of the book is that we're living through a decentralized revolution for the first time in 10,000 years, and this decentralized revolution will simply shrink the power of the nation state because the technologies that we have at our hands today, like Bitcoin, like smartphones, like the internet, like encryption, like 3D printing, all of these things naturally empower the little guy. And they're going to lead to more decentralization, okay? A lot of people call me crazy, but it's already happening. All around the world today, we've got 35 million digital nomads who have left their home country to go and work in a country that actually treats them like a citizen or like a customer, or doesn't tax them out of the wazoo for living in their country, okay? The world is already slowly becoming borderless, and only 6 years ago, there were less than 3 million digital nomads. Today, there's over 35 million. People all around the world want geographical sovereignty. People all around the world want financial sovereignty with Bitcoin. Depending upon how you measure Bitcoin adoption, there's hundreds of millions of people who have adopted Bitcoin in one way, shape, or form. I think it's pretty clear that technology is changing the world rapidly, and I just don't think politics matter. Look at China. China banned Bitcoin mining in 2021. The second most powerful nation state in the world, with the second largest economy, with the second largest population. One of the few countries with nuclear weapons. Banned Bitcoin mining in 2021. Went to war with Bitcoin mining in 2021. But what happened 6 months later? 20% of the global Bitcoin hash rate mysteriously popped up back online in China. And now we have the Chinese court system defending Bitcoin as property in 2022. And rumors are circulating daily that China is going to unban Bitcoin in 2024. Again, it doesn't matter what China does. It just shows you the politics of the situation. This technology is impossible to stop, and there is nothing more powerful than an idea whose time has come. And when I realized just how powerful the Bitcoin protocol is, and how decentralized it is, and how powerful proof of work mining is, I cared less about what mainstream media magazines said about Bitcoin. Or I cared less about people like Ray Dalio, who were so scared about governments banning Bitcoin. That used to scare me a lot. Comments like those from Ray Dalio used to scare me a lot. He's a smart guy. He's a rich guy. He must know what he's talking about. But eventually I came to the realization that maybe Ray just doesn't understand this technology. Again, I'm not taking a pot shot at Ray. I'm just saying opinions or politics don't matter. Technology is what matters. And when you understand the Bitcoin protocol, all of a sudden you're going to care less about what people say about it. And this kind of naturally flows into the next point I want to talk about, and that is listen to two sides of a debate. For me personally, one of the things that expedited my learning process of Bitcoin the most was simply listening to debates. I remember listening to this Peter Schiff and Eric Voorhees debate years ago in my very early days of learning about Bitcoin. And I was able to, listen to this pretty unbiasedly, and I came away with the conclusion that, hey, it's pretty clear one of these guys is not emotionally deranged, and one of these guys has done the work and actually fundamentally understands what they're talking about. They're not emotionally attached to their investment, okay? I'm not going to take pot shots at everyone this whole video, but I think listening to debates and different sides of different arguments can be really beneficial for you to learn more, okay? I didn't really fully understand Bitcoin until I got to Twitter in 2019, and I started having arguments and debates with these hardcore, laser-eyed Bitcoin maximalists. And that really did accelerate my learning process personally. And even just sitting on the sidelines and watching a lot of these back and forths on Twitter has really accelerated my own learning process over the past few years. Now, the next big point, this is a little bit more granular. Now, I do have some more debate-worthy topics, say for lesson number 8 and 9 of this video, that are sure to trigger some people. But while we are talking about debates, let's talk about a topic that's absolutely not debatable. And that's a big lesson that I learned myself over the years. That is, if you don't own your keys to your Bitcoin, you don't own the Bitcoin. So if you're one of the multiple hundreds of millions of people around the world who have their Bitcoin stored on an exchange, I'm sorry to tell you, but you don't own the Bitcoin. Now, I know that could sound like a little bit of an inflammatory comment, okay? But it really isn't meant to be, okay? We've had multiple examples, even over the past couple of years, that should highlight to you the importance of self-custody, okay? Everybody who had their Bitcoin in FTX, BlockFi, or Celsius just in the past 2 years learned the painful lesson of counterparty risk and trusting somebody else with their Bitcoin, okay? Let's not forget what happened all the way back with Mt. Gox in the early 2010s. 90% of all of the Bitcoin that was being traded at that time were locked into Mt. Gox. And Mt. Gox collapsed, and it didn't matter how big Mt. Gox was or what percentage of the Bitcoin network it made up. We found out that there are no bailouts in Bitcoin. And if you trust somebody else with your Bitcoin, you are trusting them and giving them the ability to run away with your Bitcoin. So many people think they've done the right thing. They go out there, they buy a hardware wallet like this Cold Card or a Bitbox, and then they write down their 12 or 24 word Bitcoin backup words on this, on paper. Okay, again, I tell you guys all the time, paper is not safe. Your Bitcoin is not safe on me. I tell you guys, do not write down your Bitcoin backup words on paper. I always encourage you, put it on titanium. One of the biggest learnings I've had over the past couple of years is unless your Bitcoin is backed up correctly, it's not safe. Okay, so again, go get a hardware wallet. Get your Bitcoin off the exchange. And again, use something like titanium to actually store your Bitcoin 12 or 24 word backup phrases on. Fun fact, you can get 15% off anything you want to buy from Stampseed. Go get yourself a kit and get yourself 15% off with a promo code Luke15. Now let's move on to a more controversial lesson, okay? It shouldn't be controversial that if you don't hold your private keys to your Bitcoin, you don't own the Bitcoin, but it will be controversial when we're talking about this. Everybody is a scammer. Anybody in the crypto space is probably looking to scam you, okay? Again, I would encourage you guys just be incredibly cautious with buying anything other than Bitcoin, okay? We have found out time and time again that all of these crypto influencers are pumping and dumping altcoins on their audience. They're getting paid $10,000 or $20,000 per video that they make on various different altcoins. I learned this lesson the hard way in 2018 and 2019. Before I found Twitter, I was victim to all of these crypto degeneracy and all of these traders who were drawing these magical lines on charts on YouTube in 2018, 2019. Okay, that is obviously, I lost a lot of money by listening to these scammers and these people who tell you it's so easy to trade Bitcoin. Use my affiliate link to 20x leverage trade Bitcoin in the description of this video. And they make these videos that make themselves look so convincing. They delete all the videos where their magical TA is wrong and they're exposed for the scammers they are. And they only leave the videos up of them being correct, okay? And again, it's the same thing on Twitter. People always delete their tweets if they're wrong. And they only leave their tweets that make them look good and right on Twitter. Anybody telling you can 20x your Bitcoin stack by trading or get yield on your Bitcoin, they're all scammers, okay? We've learned this lesson. I learned it painfully in 2018 and 2019. That is partially why I'm going so hard here on YouTube, making a ton of Bitcoin-only educational content, because in 2018, there wasn't much Bitcoin-only educational content. Bitcoin is a binary bet. It's either worth 0 or $1 quadrillion per coin. Let me explain myself. So when I was first getting into Bitcoin in 2017, 2018, I kind of understood Bitcoin was digital gold. It could be a good store of value. I knew the halvings were important, but I didn't quite fully understand the history of money and technology. And I thought I was smart. I was listening to all of these macroeconomic gurus, and I had my really diversified portfolio. I had 20% of my money in a business. I had 20% of my money in stocks. I bought, from memory, some growth stocks, AI stocks, 3D printing stocks, a lot of the ARK stocks that Cathie Wood was creating. But I was buying these in, like, I don't remember, maybe 2019, 2020, maybe 2021. Okay, I don't think it was 2021, maybe 2019, 2020. And again, I had 20% of my money in gold and silver, 20% of my money in cash, because of course, you have to be diversified and prepared for anything. And then I had 20% of my money in Bitcoin. And at the time, I thought I was a guru. I thought I was well diversified, prepared for any situation. And it took me many years to realize that that's a really bad idea. It's really just not logical to be diversified. Okay, a lot of people now say that diversification is for people who don't understand what they're talking about. And I tend to agree with that now. Okay, a lot of people say it's diversification. And that's because you're only buying the best thing with a little bit of your money. And then you're buying a lot of other worse things with the rest of your money. And obviously, it doesn't make economic sense, okay? Now, this didn't click with me until I had a conversation with someone who I regard as my longtime Bitcoin mentor now, and that is Armin the Parman. I met this chap on Twitter, 2019. I was a little bit of a lost duck. I was a little bit of a crypto trader. I was a little bit, diversified. I obviously understood the importance of Bitcoin and why it was superior and different, but I was diversified. And Armin just said to me one day, if Bitcoin fails, what is the rest of your portfolio worth? And I thought about that for a minute. I was like, hang on a minute. What does the world look like if Bitcoin fails? That means our central planners probably succeed with CBDCs. That means our central planners probably do have unlimited reign, and that means they're probably going to confiscate that 20% portfolio allocation that I had to cash and money in the bank, because I disagree with a lot of things that the government has done in 2020 and will do again in the future. So 20% of my portfolio, gone. And then, of course, I had 20% of my money in a business. That would also be absolutely gone if a central planners won and if Bitcoin lost. Think about this world. If Bitcoin loses, we're going to have CBDCs. We're going to have facial recognition rolled out all around the world. We're going to be living in a dystopian nightmare if Bitcoin loses. We're going to be living in a world where PayPal thinks it's okay to confiscate $2,500 out of your bank account if you say something that they don't agree with. Okay? We're going to be living in a world where Canadian freedom convoyers cannot even park their trucks in a street to say that they don't agree with the government of the 5th most democratic country in the world. That's right, that's Canada. They used to be called the 5th most democratic country in the world, but they froze the bank accounts of people involved in a freedom convoy. Okay? Again, I don't really need to make the case any more abundant to you guys. If Bitcoin fails, the world is going to be a really scary place. So who cares? If you have money in the bank, if you have cash, that's going to be inflated and devalued away, okay? If you own a home, there's going to be lots of conditions that probably come with home ownership in the future if Bitcoin fails. And there are a host of other very scary situations and probabilistic outcomes that we could discuss in today's video that really explains why we need Bitcoin to succeed. Again, I don't think I need to talk about all of the scary things that could happen in the world if Bitcoin fails. That's more of just a question I want you to ask yourself that really got me thinking about things, okay? So that's more of a logical, hypothetical thought experiment I want you guys to think about, okay? Then there's more of an economic argument. We could probably call this the more rational argument, of why I think Bitcoin is the only bet and why I do think it makes sense to be 100% all in Bitcoin, okay? And that is because purely, if you look at the history of money, money is a winner-take-all game. We have 5,000 years of monetary history, and whenever you look at a society in a certain section of the world and you see a superior store of value, that money takes 99% of all of the money in that area that is looking for a store of value. Now, again, I'm not saying there can't be two different forms of money. One is the store of value and one is the medium of exchange. What I am saying is that the superior store of value will suck up most of that, 90, 95% of the money that is designated towards savings. So we've seen that on the gold standard with gold. We saw that with silver, even copper beads, even with metals like copper, even when little glass beads were used as money. It's very clear that money is a winner-take-all game. And we also know that technology is a winner-take-all game. When a new technology is invented that is 100 or 1,000 times better than its competitor, it is going to absolutely dominate and it is going to take over as the next technological revolution that the entirety of society has to adopt. Okay, we've seen this through every technological revolution, whether that was the invention of gunpowder. Those who didn't adopt gunpowder were completely obsoleted. Okay, the same thing with every form of weaponry or armory you can think of, or even more recently, just think about technologies like the internet. Countries that adopted the internet first are outcompeting other countries, okay? Companies that are adopting and utilizing the internet first are outcompeting its competitors who are lagging to adopt that new technology. The same will be true with Bitcoin. So again, I think we have a technological reasoning for why Bitcoin is going to outcompete all of the other technologies in the world today that are trying to store value. Okay, so a lot of people don't think about it like this, but the reason we have a $350 trillion real estate market today is because money's broken and money is looking for a store of value. It's looking for a place to hide itself against that 10% debasement of fiat currency that we see all around the world. Okay, people are trying to get their money out of cash or dollars and put it in a vehicle that can't be printed or debased or devalued or inflated away to be worth nothing. Okay, that's why we have hundreds of trillions of dollars worth of debt around the world. Okay, people want to buy bonds because it yields them a return. They know that the money's losing 10% of its value a year, so they need at least a 5% return from that bond, which is obviously called yield. That kind of helps the debasement not be so dramatic and in your face, so to say, okay? And that's the reason why we have, $900 trillion of money in the world looking for a safe store of value. So that is Bitcoin's total addressable market cap, $900 trillion. Bitcoin today is only worth 1.2 trillion. Now again, if money is a winner-take-all game, and it has been a winner-take-all game for the past 5,000 to 6,000 years of monetary history, I'll let you guys come up with your own calculations about how much of that $900 trillion you think Bitcoin can capture. I'm not going to get into the maths today of explaining why I believe Bitcoin can be worth tens of millions of dollars per coin in today's purchasing power without hyperinflation, okay? I've done that in multiple other videos, and if you want to learn more about what I believe the fair purchasing power of Bitcoin could be in the future, I'll put a link to that video right about there. And if you want to learn how much Bitcoin you need to get rich, check out the recent video I filmed on that topic. I'm going to put a link to that one right about there. Well, that's it, guys. Thanks for tuning in. Check out the video I'll put up on screen up over there. It's a good one. Give it a click, and I'll see you guys in the next one.